What's up, brothers? This video is about changes in states of delivery. It was requested of me to explain the difference between a CISD, OB, and SMR, which is change in state of delivery, order block, and smart money reversal. So I did some digging and watched some ICT content and did more digging. And this is what I found. Now, I'll gladly accept and challenge you to correct me if I'm wrong. But this is what I found. And it's being taught wrong all too commonly, which unfortunately is common with ICT concepts in general. But we'll start it like this. A CISD is a category of things, not a thing all on its own. So a change in the state of delivery is something in price that indicates that there is going to be a change in price delivery, okay? Those things, some examples of those things are order blocks and all of the sub order blocks that fall under that category: propulsion blocks, breaker blocks, mitigation blocks, rejection blocks, etc. So order blocks are changes in states of delivery. A smart money reversal is a change in the state of delivery, and a market structure shift is a change in the state of delivery. There isn't a change in state of delivery PD array. Now, what a lot of people are doing, and I understand the need to differentiate, but that's not what it is. So let me see if I can find an example here. So what people are doing is this. Right here, where my vertical cursor line is, goes up through this up close bar. That's an order block, this up close bar. This order block takes liquidity. This down close candle closes over it, and it is traded back up into and traded away from. So this white up close candle is a bearish order block. You will find, okay, I'll just say it like this. You will find a lot of people out there will teach that order block as a CISD. And yes, it is, because an order block is indicating a change in the state of delivery. But there isn't a PD array called a CISD, a change in state of delivery. An order block is under the change of state of delivery umbrella. So there are order blocks that take liquidity, which are fantastic. I like them. They're really great order blocks, but there are order blocks that don't do that too. Not every candle with a following candle that closes past it is an order block, but see if I can find one here. Yeah, right here. This is an order block. This up close candle. It's an order block. And if price were to trade into it, it would change the state of delivery commonly and trade away. Its movement up would change to come back down. It didn't get that far. It stayed with this fair value gap and volume imbalance that's in there, but that's an order block too. I mean, go ask anybody. That is, we were moving down. It's a opposing candle to the current trend, and we keep moving back down. There is a change in the state of delivery right there. And if we tap it, price will react from that. That's also an order block, and it didn't take liquidity. That's an order block, and it did take liquidity. That's the only difference between them. They're both changes in states of delivery. What else tells you price is going to change its state of delivery? A market structure shift. And you guys should all be very familiar with that by watching 2022 mentorship. I don't know if there was a really good example of that today. Let's see. That one was kind of ugly, honestly, but... And there was no SMT there. I remember that. Maybe... This one, there is a market structure shift in here, but it's not the kind that I like. What I like, I want to find it. I don't just want to draw you a pretty picture. So, because I don't script my videos, it might take me a second to find an example that I like that shows what I want to show. Yeah, maybe this will do. What's the trend here? Other than ugly choppy, right? It's down. Price is heading down for a good hour straight on the 1 minute chart here. Trend is down. How do you know it's not going to continue? How do you know it's going to reverse? Or how do you know when it's going to reverse? You're never going to know if it's going to reverse, but what's going to tell you that price is reversing or changing its state of delivery? One of the PD arrays covered under the category of changes in states of delivery. That's exactly what they indicate. So here, there is a market structure shift, and I want you to take a second and tell me where it is. Just spot it in your mind. How many of you say right here? Once we body close past that high, that's a market structure shift. In my opinion, that's wrong. There are some instances that get a little ambiguous in ICT's teachings, and it's tough to teach market structure shifts, but what he does teach, and I can't remember exactly which video, is, we'll say a bullish market structure shift is the break of the high that created the low. Vice versa for bearish. So what that means is you've got this low and you start to see price coming up. At what point do you know the state of delivery is changing? When the high that created that low gets broken, which is up here. In addition to, he also says, displacement. Displacement enough to leave a fair value gap. Fair value gaps in itself indicate displacement, right? You just, oh boy. When you get displacement, you get fair value gaps. Sorry about that. So, right here isn't really that great. It's not really showing me displacement. Look at this candle. That's displacement. This candle is got a body of 79 to 85 points. This candle's probably more like 6 or 7. This candle's like 7-ish. This candle's like 7-ish. None of that to me looks like I want to change direction now. What does look like I want to change direction? This big mother candle, 19 to 37, almost 20 points in a single candle through this high. Screw this high. Screw your highs. I'm changing direction. It leaves a fair value gap here. Not as big as I'd like, but it does consolidate just beforehand, leaving order blocks. In particular, I like these 3 down close candles. I can guarantee you ICT would have drawn that at the wick. I like to draw them at the bodies. It respects the fair value gap in here enough that it doesn't even touch the order block that's there. Hang on. Why is that over there? I'm going to put labels on these. Market structure shift. Order block. Fair value gap. All right. So we've shifted structure clearly, obviously, with intention, with displacement. And then we've come back down into the imbalance left or the order block or the whatever other PD array. Okay. 50% OTE, overlap all of them. I don't care. You need something to enter off of. You want price to retrace, and you know now that it wants to change delivery because it shifted structure. But you don't know. So you know that it wants to shift. You just need a PD array to enter off of to get into that move. So find one, and then this is what I like. And there it goes. Now, I know this is hindsight. This is an opportune example to show you exactly what that is supposed to look like. It's not just some little high that is only left there because of one down close candle, and then it closes above it again. It's not proving it wants to change direction by disrespecting one down close candle. But it's disrespecting this displacement. This displacement now means nothing as far as the intention of direction. So now you know it's going the other way. Okay? So market structure shifts are not meant to be the earliest possible sign. It's meant to be confirmation and is often a little further along than you would think. That's not a market structure shift. It did tap this wick on this order block, though, and this fair value gap, and is great. In this fractal of price, this is a market maker buy model, and this is your low risk buy. Low risk buys happen before the market structure shift. This is your first stage distribution, and technically it's over by the time it breaks through this, so there isn't really a second stage distribution. It gets kind of delayed for the news at 1, and off you go. But that's what a market structure shift is. I spend more time on that than telling you what an order block is. There's more to it than an order block. Order blocks are easy to find. And they're all the same. They're all order blocks. They're all breaker blocks are breaker blocks. All order blocks are order blocks. None of them are extra special because they take liquidity or not. They're not any more high probability. They're just a different kind. It's an order block that takes liquidity, an order block that doesn't take liquidity. The liquidity doesn't make the order block itself more probable, but it adds confluence to the change in state of delivery as a whole. Because you can have a change in state of delivery just off a liquidity sweep. You can swipe liquidity and go right the other way. So technically a liquidity sweep could be an indication of a change of state of delivery too. like turtle soups. There's more into turtle soups that tell you that price is going to reverse, but an order block's an order block. That's all there is. That's all there is to it. So changes in states of deliveries are not PD arrays all within themselves. They are a category of PD arrays. So we've covered order blocks and market structure shifts. The other one is a smart money reversal. It is a form of a change of state of delivery. It does tell you that price delivery is going to change. And it tells you that by SMT, by a lack of or crack of correlation between two indices or two correlated assets. You can use this in Forex too. So, let's see. I have this chart here. It's a different piece of price than what I was showing you before. But this chart, I have all three indices. You can only see two of them. But I have NQ, ES, and YM all in this chart. And I follow it and look for SMT at the point that I would like to see price reverse. And the SMT tells me that that is correct. My thinking is correct. At least the first sign. You can trade right off of SMTs. But what I like to do is I like to look for 2 or 3 indications of the change of state of delivery. I like, in the market maker models, I like to look for first an SMT. If we've come into a high time frame PD array where I think price is going to reverse already, I like to look for SMT to confirm that. I'm like, all right, we're probably going to start trading away now. Then I like to look for an order block or a market structure shift to form. One of the other 2 forms of CISDs. They don't have to form in any particular order, like one doesn't have to come before the other one. And in this case, we do get that eventually. See these 2 down close candles here on NQ. This up close candle, I'll zoom in, does finally close over the body of these down close candles, which these 2 swipe the liquidity and make the low and then get closed above. So now I consider that an order block. What happens right away? The next candle opens up right here, trades down into it, and trades away. At that same time, the high here that made this low, the high gets closed over too. That same candle made an order block and a market structure shift at the same time. We traded down into it, and away we go. Normally, you want to see displacement for the market structure shift, which leaves a fair value gap. Yes. In this case, no. There's no fair value gap. But look at this candle, this up close candle that shifted structure. Compare it to the other ones. It's bigger than this one, 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 this one. Not that one. This one, this one, this one, this one, this one, this one. Probably not that, that, or that during the manipulation leg here. That one, and that one. I'll call it 80% of the previous candles in the recent price action. This candle is bigger than it. That's displacement. It shifts. It hits the OB. You could enter here. Sweet. Great. It continues to displace, making candles bigger than the previous. Bigger, bigger. It's moving up. It's disrespecting high after high after high. And guess what? After the market structure shift, it does make an order or a fair value gap. And it does come back to it. It's not the cleanest. It's not the most ideal. There are these little things that you learn and that you pick up where you like to see, highest probability opportunities form when the fair value gap is underneath or behind, depending on your direction, bullish or bearish, behind the market structure shift. But we already have an order block here. We've already reacted to it. We're not coming below this. There's no fair value gap down here anyway. So what you're looking for is up here. And it made enough displacement through this market structure shift and all these other highs to tell you we're going that way for many points, many handles. I mean, it comes down and annihilates the rest of the day, but there is a winning trade here with a ton of confluence. And I detracted from what an SMR, smart money reversal, SMT, that's all that it really is. A smart money reversal is an SMT in a market maker model. Not all SMTs are smart money reversals. SMT happens all over the place. That doesn't mean price is going to reverse. And it doesn't mean it's a smart money reversal. A smart money reversal is the title given to the SMT at the peak or the valley of the market maker model. SMT is the title given to the Kraken correlation between assets at the highs or the lows. So SMT happens everywhere. But what you have to find is that it aligns with the narrative, just like fair value gaps happen everywhere. Some of them get blasted through. Some of them they bounce right off. So you can't just trade every fair value gap. You can't just trade every market structure shift. You can't trade every order block. You can't trade every SMT. They have to align with the whole idea, the whole narrative of it. Just for fun, I'm going to mark out how much this could have gained right up to that liquidity. 65 points. Any amount of points in there. Basically zero drawdown on either the fair value gap or the order block after the market structure shift, because it had all of these changes of states of deliveries. It had SMT down here. It had displacement. It had a market structure shift. It had an order block. The order block took liquidity. The whole thing traded down inside of a high time frame PD array, I think. I might be talking out of my ass here, but yep. This big 15-minute bounced off that 15-minute, and then there's also this big old wick. Can you see? You can't see that on screen. There you go. 15-minute imbalance. This wick could be a rejection block if price comes into it and rejects it. Not all wicks are rejection blocks. This wick was left down here, so this is probably more of a target for liquidity than anything. But mark out your wicks, big wicks, obvious wicks. Mark those out and see if price reacts to them. Back to the 1 minute. So we come into that 15-minute fair value gap that hadn't been closed over yet. We come back into that 15-minute wick. It didn't really do much on the wick. It didn't happen to hit 25% or 50%. Don't worry about the 618. It's in the wrong direction anyway. So yeah, it didn't really align with any of that, any of those quadrants like ICT teaches it, but it respected the area, the fair value gap, as you would expect, and traded. So all of that stacked together is a really nice trade. You get out when it hits a high somewhere. You could, I mean, there's fair value gaps you could get out after it's filled it, which is what price wants to do, fill imbalances and take liquidity. You can get out anywhere here and have made a decent amount of money. Okay. Price melts for the rest of the day, but that's not the point. So I hope that that has explained the difference between these three. Like I said, a lot of people are teaching CISDs are a specific type of order block, and I can't find ICT talking about it anywhere. Just because an order block takes liquidity doesn't make it a different thing. It's nice to have the confluence of liquidity taken. Your order block is likely going to be the point of reversal. That area is now going to reverse because it took liquidity. It closed over that last candle and made an order block. Maybe it tapped a high time frame PDA array at the same time. So like all of these indications of the change of price delivery changing happen at the same time. It's great. But it's not, a CISD is not an order block. Just like if, I don't know, an SMT. SMTs can happen in the middle of nowhere. They can happen in a high time frame PD array. They can happen, let's just do that. They can happen in the middle of nowhere, or they can happen within a fair value gap somewhere. That doesn't change the SMT to a CISMT or something. It's still an SMT. That's it. So hopefully that's cleared up some confusion, because I know it's taught out there and I just can't find it. I can't find ICT explaining it that way. And I don't know how it ended up developing into that. And like I said, I understand the need to differentiate, or the want to differentiate order blocks, since they kind of all are separated. An order block is an order block. A breaker block is a different kind. But a CISD is an umbrella term. It's a category of PD arrays that tell you that price is changing, not its own PD array. So I'm going to stop rambling and repeating myself. If you need more examples, join my Discord, ask some questions. I'll go find more and we can talk about it. Until then, thanks for checking it out.